doing today? This is Mark, your money plan coach. Today we're going to go through a second tutorial, deeper dive into this real estate mortgage and business area here. This tab number 2, I'm scrolling up, which is a good way to just work on all these forms. But let's just go through a quick deep dive on this real estate mortgage and business income. One thing we didn't discuss in the first one is how to input investment property. So let's just put in an investment property right now. We'll just call it investment property. We're going to choose it as an investment property. We're going to put in the estimated value, the estimated mortgage. If I have the exact information, I'll put in the exact. Why not? Usually there's a higher interest rate with investment properties and owner-occupied properties, and property taxes. Let's say it's $500 a month, homeowners insurance. And in an investment property, what we're also going to put in is how much rent or income we're earning in that property. So let's say that for this $500,000 property, we're getting $2,500 in income, and all of our expenses or repairs, property management, etc. We've got taxes and insurance already in here. Let's say we have another $250 for other stuff. We're going to save it just like we always do, and this is just giving us the warning about make sure something's in there so everything does save. And as the deeper dive goes, we're going to start explaining some of these other items. For example, once we have all our mortgage information in here, we know exactly when those mortgages are going to be paid off, how many months we have left, so we can adjust them and make extra payments according to when we want those mortgages paid off. It also is going to show us our cash flow in each property. So here we have a minus $500 cash flow for that second mortgage. For the first mortgage, of course, it's $3,250 minus cash flow for these two owner-occupied properties, because here we're also counting the property taxes, homeowners insurance, and monthly repairs. And then also we're seeing not only when this investment property is going to get paid off. Let's say we're paying a little bit more towards that mortgage just to get a friendlier, more probable months to pay off number in here. But we're also going to see on this investment property how profitable it is. So if it's getting paid off in about, this looks like about 22 years, that's what the property taxes are, the homeowners insurance, HOA fees. We're getting $2,500 in rent, and it's costing us $250 a month in other expenses, because again, an investment property, we're going to put all our expenses. So right now we can see we have a negative $900 cash flow we got to make up for here for that investment property. And if you have multiple investment or owner-occupied property, all of that information is going to carry and calculate down here. So I know that my owner-occupied properties in total have a $750,000 value. My investment real estate and businesses have a $500,000 value. And let's just add one more so you can see how this works. Let's say I have a side business, and that's an investment. And let's say I think, well, it's that little business of mine that I work out of the garage is worth maybe $50,000 if I could sell it. And maybe I have a small business loan on it for $25,000. Maybe the payment on that is $250 a month at 6%. And let's say I derive $500 in monthly income, and maybe it costs me $200 in expenses. That's how we work our small businesses or privately owned businesses into here. And this would be the income that you're earning, not counting salary and wages that you pay yourself. Your salary and wages that you pay yourself are going to go over here in this area. So if I had this additional business, or George did in this case, he would say, well, I'm paying myself $500 a month, and then also at the end of the year, when I have all my profits accounted for, all my expenses accounted for, not only did I get that monthly wage I paid myself of $500 a month, but I also had about $500 in profit. That's the rent or income I'm deriving, and then the monthly expenses on that business. So again, this is going to show me my net cash flow from that business after I've paid off the loan, I've paid myself some money in profits, plus the salary that I'm accounting for here. So it depends on how you pay yourself. If you pay yourself all salary and there's no profits at the end of the year, put it all over here. If you pay yourself all profits at the end of the year and you don't take a salary, put it all over here, or blend it based on what you're doing. And then your expenses here, of course. So here you can see on all my owner-occupied property, I know exactly how much my values are there, what I owe, what my payments are, what my net cash flow is for my owner-occupied property, what my net cash flow is for my investments, real estate investments or business investments, and what the totals are for all of my real estate and business values, loans, payments, and cash flow. One more item on this page we're going to get to in the next tutorials, how to use this calculator. That will be beneficial and helpful. We're not going to go through that right now. Right now we just want to go through this top section, make sure you understand it. A couple of items I didn't mention. It shows you your total equity for your owner-occupied plus your investment and your total. You can see your loan to value. Loan to value means how much loan do I have divided by the total value of the property. And this is an important number because that's going to impact your lending and financing opportunities and prices. So that's pretty much it. The rest is self-explanatory. And one more thing I'll just notice or show you, as you can see, your business and investment income loss here is calculating. So now this income that I had in here is adjusted for my investment business. If it's a profit, great. But hopefully that gives you a deeper dive and look into how to understand and work with this real estate mortgage and business page a little better. Thanks for joining today, and keep putting that information in. Make sure it's as accurate as possible as you move forward, and we'll talk to you on the next tutorial. Have a great day.